Hi there, and welcome to the More to Life webinar with the Right Mortgage Network. With me today, I've got Victoria Wilson, the Equity Release Manager from the Right Mortgage, and Ben Allen, the Compliance Director. We're going to have a chat about the market as a whole, how you're finding it, and obviously the support we can give for equity release from More to Life and the Air Group with both Ben and Victoria. Hi, Victoria.
Hello.
Great to see you both. How are you?
Yeah, doing well, actually. Yeah, things are going very well for us at the moment. As a network, things are going really positively. So I may as well start by telling you a bit about what we've been up to recently, if that's all right.
Please, let's go ahead with that.
Okay, so yeah, we despite the challenges of last year that were obvious, and we don't want to go into the negative side of things, we still had a bumper year. So our last fiscal year was our best, and we're very pleased about that. And we've started this fiscal year, so it began at the beginning of August, and things are going really well. So we're pleased about that. Obviously, we're conscious about the state of health of all of the advisors and our staff as well. So we're cautious, and of course, we're cautiously optimistic about what lies ahead of us, because there's still a small degree of uncertainty, but with every day that passes, we're feeling more and more confident. So as a business, we're in a very strong place at the moment, and that's lovely. We fast forward then to what we saw last week from the budget, and a couple of things really stood out to me. Obviously, the extension of the stamp duty, well, that didn't come as a major shock. But what's interesting to think is that we're probably about 17 weeks or just under away from the end of that period. And you'll recall that only a couple of months back, we had the likes of large mortgage clubs and Rightmove as well, talking about the typical process start to finish being 17 to 18 weeks. So already we're in a little window where we need to be getting things moving. So that's one thing to look at. The budget also spoke about the finish of Help to Buy and what's coming next. Now, it's nice to hear from speaking to some of our lender partners what they're looking to achieve. We hopefully will get to see 90% and possibly even 95% mortgages becoming a little bit more commonplace. But there's still this issue about where the deposit's going to come from. Property values, well, they're continuing to rise. We can see that. So it's really not just about the lending picture, but how we can help people to get started. And I think probably you guys will mention a bit in a minute about Bank of Mum and Dad and Bank of Gran and Gramps as well. So interested to see where that goes. But there's a lot of innovation at the minute. So if you look at what's happened in the sandbox and the different ideas that are coming out from various providers, everything from the springboard mortgage supplied right the way through to ones where parents are being guarantors or where they're looking after a little section. This area is going to grow because the property market seems to show no signs of slowing down, which is good because it opens up opportunity for all of us. So yeah, things are going well.
Absolutely, that's great to hear, Ben. Thank you. And you're right, no doubt Victoria and I'll touch on it in a second. Just as a follow-up to that, then, what sort of shape has that meant around the business instead of in terms of numbers and headcount and recruitment?
Yeah, so it's nice for me to be able to sit here and say how well I've been supported by the board of directors to bring people into my departments. I mean, as a business, we've grown our staff numbers anyway, which is really, really good to see. But when we look at growth, and right now, just to give you some sort of an idea, we've got a significant number of people looking to join our network. So if I was to tell you that our pipeline is in the 70s at the moment of advisors, we're probably just about to go into the 80s. In fact, you can see the interest that's out there for a thriving network. So I'm really proud to be part of that. But then we think about the resource that's going to come. So last year, we added 144 net advisors. Okay. And with that, the resource needed to come. So we brought in new compliance managers, we brought in supervision and development managers, and we brought in additional staff around the quality functions, fitness and propriety functions, and financial promotions as well. So I'm making myself less and less popular with our board of directors because every time we have a meeting, I ask for another member of staff. But the good news is they're supporting me. So that's great. But the one to really mention, and this will be interesting to you, is we're looking to do a bit more on the equity release side, and particularly with an equity release supervision and development manager. So we've already brought an individual on to work in that, somebody who's been around the industry and knows things well. And we've just added a new person So Kate will be starting with us imminently, Kate Glover. We're looking forward to welcoming her, and she's going to be making the most of training and developing our advisors, starting off with the trainees and then developing more broadly into getting the best from all of our advisors and helping them to get the best from from their client banks, as it were, and to supply the best.
That's excellent news, Ben. Thank you. And we look forward to working alongside her in all those things to support really with equity release. So Victoria, hi, from that then, from a particularly equity release perspective, how have you found end of 20 into 21 with equity release and your advisors? What are they giving back to yourself?
Yeah, and just generally with the whole attitude of the market and like what Ben was saying, it's not hard to know that elsewhere in the obviously other industries and things have been going very negatively. Just in our space, it's just been really thriving. And I think this third lockdown as well that's just happened, it didn't affect our advisors at all. They continue to just work closer with their clients as well. And with the extension of the stamp duty, it just meant that the advisors just had a bit more leeway with giving the customers that due care and attention that they do need an equity release, and they're not on that time pressure with any purchases they might have been going through, which has also been another really popular area with the equity release at the moment, with purchases, people wanting to move closer to their loved ones, people wanting to move out of maybe not the nice area they live in because they think life's too short, I'm just going to go live by the seaside. I've been seeing loads of those happen recently, and I just think as the year carries on and we're going into next year, I can only see it going even better, to be honest, because even where people might be using the funds for purchasing properties or maybe being able to go on holiday when we're, fingers crossed, able to very soon, and then you've also got the people who were in debt over this year, with the other industries that haven't been as successful as ours has, that then there'll be parents wanting to gift to their family members, other areas like that. I can only really see the industry really going into a boom, and just all that positivity just going around and just everything being really positive.
Well, that is, I was going to use that term, very positive and excellent to hear. Thank you. And from our perspective, and More to Life and Air would absolutely back that up. That's what we're seeing around the industry and within the lender particularly. You're right, things like the stamp duty that yourself and Ben have mentioned, where are those deposits coming from for those first and second time buyers wanting to use the stamp duty hiatus? And obviously equity release from Bank of Mum and Dad, Bank of Nan and Grandad. Got lots of information and material for your advisors around that we can help support with. And obviously we'll continue to do that through articles, through emails, communiques, through some of the virtual events that we're doing, particularly around equity release. Obviously, you're right, pension income and still employment issues maybe to come with the furlough. That will be a driver for equity release as well. People across the UK from our market monitor, which I know your advisors have got access to, £1.5 trillion worth of equity still in houses in the UK for over 65s. You're right, it's there to be used. They've earned the right to use that. And yourselves and we can help support them with whatever they need to use that for. Obviously, still the interest-only mortgage time bomb. The FCA will tell you £18 billion to be settled this year, 60,000 plans. And we use your home to stay in your home as our marketing message around that. And when your clients understand that, they really get it. As you'll know, they don't really want to move. They've been there 20 or 30 years. They know everybody in the close. Their godparents, the next door's kids. They drink at the local hostelry. And so equity release, again, lots of examples from us about clients that have used that as a good news story to stay in their home where they wanted to. So that's excellent. Thank you very much, guys. I'm glad it's really positive at the moment, both from Ben's point of view within compliance at the Right Mortgage as a whole, and Victoria within her equity release empire within that. And as I suggested, from a More to Life and Air point of view, we'd love to continue to help supporting yourselves and your advisors. You'll hear much more from us throughout the year. Thank you very much for your time. I hope it was informative and valuable, and we'll talk to you all again soon.
Thanks very much. Great.
Thanks very much. Great. Also lovely to hear about how positive things are from your perspective as well, not just to toot our own horns. It's lovely to see from you guys too.
Great. Thank you very much.
Thanks.
Thank you.